Holy damn. Have you guys been in so many trades when this keeps happening? Dude, finally, this video you guys get to find out how to avoid this BS whenever you jump on a trade. Welcome to Trade Theory, and let's get right into this. Hello ladies and gentlemen, boys and girls, and those of you that just want to know about the trading industry, welcome to Trade Theory, and today I'm going to be speaking to you about what you need to avoid when you're trading in FX options, because there's so many things, but at the same time the reward is amazing, so it will drive you to try the trade once. But let me just give you guys some tips, alright? But before we can even get into the video, I must say, your capital may still be at risk. So think calm, trade smart. Now, let's get back into this, alright? And like I need to say, this is not an investment advice. I just want you guys to be creative, take the things that I've done on the channel, implement it in your life, keep your strategies, build a brand new one using the things that I've said, and test it on your paper trade. Alright, now let's get back to the video. Those of you that are thinking, wait, I got money in my account, but it still comes up as red. I try to put £10, $10, €10, but it still comes up as red. That is because the minimum requirement for an option trade in FX options is £30, €30, $30. If you do not have that, well, you know what I mean by that. If you do not have that on the account, then it will just come up as red and you cannot even enter a trade anyway. Now that we got the formalities out of the way, now let's get back to the main topic. What do we need to avoid on an FX option trade? Now I'm going to be showing you some few print screens of the things that you need to avoid, but don't worry, I will show you a clip of what happened if you do not follow these rules. Now look at this print screen that I've designed for you guys right here. This is from a live trade, obviously. Like, why would I even do that to you guys? That's just ridiculous. But look, it's all here. Now, as you can see, look at the far right of the screen on your phone, tablet, wherever you're watching this video. As you can see, the whole bar is completely red. I mean, dude, it is completely red. I do not see a single part that's green. Now, this is the part that I want you guys to remember. Now, as I've mentioned, you see the part where it says minus 100-ish, and you see another minus 100. You see the middle part where you see 200s, and above that 100 is 87, and below that 100 is just another 100, and you see right between the 200s, that's the dead center. Right now you see the range where you see both minus 100. Now that is meant to be the part. There should be a part where it will be green and the rest upward. When even though you see minus 87%, it will be green. Now even if you see the minus 100 part and downwards, it still be green. Now you don't see that. We just see a full-on red bar. Are you guys looking to destroy your account? Like, Jesus, like, don't even enter at this point. And I'll show you what happened if you do enter anyway, just for your sake. Roll the clip. And as you can see on the red bar, it's a huge no-no. It's a huge no-no. But at the same time, it's a downtrend. Look at this. It's a downtrend. It's going up and it's fighting back down. So if we zoom out to a daily scale, you can see that it was going up and now it's fighting to go down. But would it reach in time? No, it won't. So you gotta pass the trade. But people keep entering the trade like I did. Don't worry about it. This is a practice account. And people keep entering the trade at the wrong time. So now that the person entered here, he's thinking, no, damn it. Yeah, I want to make so much money. Yeah. But what they don't realize is that look at the side. They're forgetting that, look, if it's a whole red bar, if you do not see a green bar here, it means you cannot enter the trade. It's like you're trying to lose this 30, right? And that's what's going to happen on this trade. Watch. This is going to go. Because people keep thinking, dude, look, it's going to go down. It's going up. By the Fibonacci scale, it has to go down. It's true. It will go down. but it ain't gonna go down low enough to give you profit. Now, if you see the green from this area where the cursor's at, it will allow you to get profit. Do you understand? Hopefully that clip have given you some insight to what I was talking about when to trade, because even though the trade might look so attractive, like god damn, you're like, yo, this is going to make so much, this is going to beat my personal best. Oh my god, I love this right now. I'm gonna click it to beat my personal best. But remember, at the side it was all red, so you gotta have to be some Jesus up in this, like you gotta pull out some miracle bag and just throw the dust on your computer, and hopefully it goes all the way down to the point that you make profit. And if it does, do you know the profit will be oh my god, it will blow your mind. That's how much profit you'll get if it were to do that. But come on, let's be real here, people. I even hit my mic for that one. Come on, let's be real. It's not going to happen like that. It's not going to happen like that. But if it does, then please send me the print screen. Send me the print screen. I would love to see how that looks. Because, dude, I'll definitely put it on the video like, look, a miracle trade. I'll call it the miracle trade. But look, before we get off topic, let's get back in. Now, the next thing you guys need to know is that, yes, even though the bar at the red side is there, there's another one. There's another one. I'll show you right now. This is a second example. Alright, this is the next example. You're thinking, okay, what am I looking at here? Trade theory. Okay, I'm telling you right now. As you can see, I drew the Fibonacci scale, and you can see I put a trend line of a bearish market. But look, it don't seem to be a bearish market, is it? Look at the trade right now. From the point that you see the downtrend, it did, like, look at those two different candles. It was so long. It went up green and it went down red, and that's a long candle. That's the first one. And there's a second one, a long green candle and then a red candle, and then afterwards it was just a green candle all the way through, and it started to go up, even though it started to go down, and it started to go up, and it started to go down again. But clearly we can see that it's not a downtrend no more. I think it looked like a reversal. A reversal is when the point of the trade, when it goes from one point to the next. If it was a bear market, it will become a bullish market. If it was a bullish market, it will become a bearish market. And now that you know that, now look at the picture carefully. You can clearly see on the trade that if you were to sell, yeah, you're gonna make profit. But if you click buy, you ain't gonna make nothing. Look at that. It's all red all the way up. It is completely ludicrous to see people click buy, and you're gonna obviously lose. Now, let me give you an example. If it were to go up, you won't be able to reach your profit. But if it does go down, then you may make profit. Why would you risk your income on may? You may make income. You may. That don't sound that's not strong enough. That's not valid enough to go in a trade on. I might make profit. I might. Really? If you ever say that to the people from Wall Street, I might make profit, they'll look at you like, get out of here. Like, you're fired. I ain't risking no one's capital. Get out of here. And now you're like, oh man. So believe me when I say, don't even waste your time. If you see something like that and you think it's going to go up, but there's a chance that it could be a downtrend anyway, why would you risk it? By the time the uptrends start to reverse back to the downtrend, obviously, which it will from the picture, as you can see on the print screen, it will be too late. You're going to have to wait for the next trade to decide whether to buy or sell. Whew, if you guys are watching throughout the whole time up to this point, you guys are absolute legends. It shows that you guys are willing to learn. I'm learning too with you guys. So if you guys are retail traders, see, you saw my account. I started as a retail trader as well as yourself. So if you're a retail trader right now, that's fantastic. Why? Because as soon as I grow, you're growing with me, I hope, or learning from my mistakes or success. Depends on what you define as failure or success. Now, the last thing to avoid is the timing. Oh my god, the timing. I cannot stress this enough. And what do I mean by the timing? So, I'm going to show you the same picture, right, that I used on the other thing, but the differences between the other picture and this picture is that I want to show you the time. You see that where I circled the time? There's going to be a time limit in which where the trade will close down and you cannot leave, or basically cannot leave meaning as sell out early. So imagine the trade were to go down and you successfully chose the right trade, it's going down, but then there's a time limit saying as soon as it hits this time limit, then you're going to have to wait for the 10-second time limit before doing the next trade. It makes sense, right? It does make sense. But why do you feel that there's a huge but? Because it's true. Nicki Minaj ain't here. But this is serious. Listen, the reason why I'm telling you this right now, because there's gonna be a point where you see an amazing trade and you did successfully click the right one, God bless you. It's going down, you forgot to leave the trade at the right time, then the time limit starts, you cannot click sell, you cannot sell your stock, you cannot sell it, you can't. It's stuck. You're gonna have to wait for the countdown, like binary options, and when it hits zero, whether you make profit or not is down to the trade, right? It's down to your strategy, the trade itself. Now imagine this: it's going down, and the profit that you're making is like 20%. So you are making income. It's 20%, but then you forgot, out of greed, to close the trade and take that 20% profit. Now there's a countdown. It's closed, like binary option. It's going down. Now it's going up. It's reversing. It's reversing. It's going up. And within those seconds that you have to wait for the trade to end, it's going up. It's going up. It's hitting zero. Oh, now you're losing money. Now you're losing money. And boom, by the time it hit zero, you lost your income. Shit. Terrible, right? So, to avoid that, all I ask for you guys is to have a target. Have a target. That means if the trade were to go here, I should leave if the trade is going there. You know what I'm trying to say? So I'm going to show you that in a print screen manner so you guys know exactly what I just said, because it's best to show images than just to say them, alright? I'm going to show you the print screens. Here you are. Now, hopefully, I've explained everything that I need to explain, because on this channel, I believe by telling you guys the mistakes that can be made, that you will try to avoid them at all costs. If I keep telling you guys all the mistakes that could happen in a trade and you avoid them at all costs, then by law of the life itself, it should give you profit, right? If you're avoiding all the mistakes, that means you have to be making profit, right? That's the logic of trade theory, and that's what we're trying to prove here. And if that's the case, then put a like on the video. Thank you guys for watching this video. And like I always say, oh my god, I cannot stress this enough. Think calm, trade smart. And see you later.